And for more on this, we are being joined right now by Mr. D.P. Singh. He's the Deputy Managing Director and Joint CEO, SBI Mutual Funds, and he joins us live from Mumbai. Welcome to the broadcast, Mr. Singh. And my first question is, now, what is your outlook for money flowing into India?
See, I am very bullish on this, and the moment we are talking to the foreign investors, NRIs as well as FPIs and FDIs, they are very bullish on India, and rightly so, because of the growth trajectory which is likely to be there in the next decade. Of course, there are sometimes it's being talked that the valuations are stretched, so on and so forth. But at the same time, there's the TINA factor, and see, people are factoring the growth. The growth which is likely to come in India is something which is attracting lot number of investors and amount of money which is flowing in and will continue to flow in, and that's evident from the fact the numbers which we have seen for the month of December also, the data for which has come. So people are putting in money, and the best part is that there's no demand supply kind of gap, because a lot of IPOs are also coming and a lot of new corporates are entering into the public space. So that's another good story for all of us to watch.
And Mr. Singh, what is the outlook for Indian markets and mutual funds?
See, Indian markets, mutual funds and Indian market, they are two separate things. Indian market is the same as I talked about, that markets definitely at this point of time, valuations look little stretched when we look at the macro number. But there are still a lot of stories which are yet to unfold. There are a lot of stocks which are still at very fair values, and see, the investment managers, the portfolio managers are looking into those stories and getting the money into those stocks. It's not that now all is going into one stock, or that's the reason why mid caps and small caps and the people, the stocks which have not been in favor are getting into favor, because people are researching a lot more companies than ever before. So that's the reason, and I think the outlook is very good for the businesses. When we talk about the certainty on the political side, see, one thing is very clear: the small percentage of see, uncertainty which is there, even if that fructifies, the businesses are in very good health, very pink of their health, and the political will, the politics and the economics don't go always hand in hand. These are independent businesses, are in pink of health, and I don't think that even if there's a small percentage of uncertainty, even if that fructifies, the markets may have some short-term hiccups, but eventually the businesses will take over, and we are going to have a very good run. Yeah.
And do you think that the bets on India are justified?
Yes, it is. It is justified because of the reasons of the growth trajectory. People don't. 1 year is not a unit. 1 quarter or 2 quarters is not a unit of how the markets look at it. They look at 10 years, 20 years growth trajectory of the country, and I think we are in the best of the era. All the reforms which have taken place during the last 5-10 years, those are going to show the results now, and these are going to come in next 1 or 2 decades. And the reforms are going to happen unabated. More and more reforms will come, and with the kind of geography, the kind of the diversity, and the kind of the overall country is, I think we will have a very good run in the coming 1 or 2 decades.
And where do you see the best opportunity, you know, if one were to choose the best for investments in India?
See, today, when you're talking about the where to invest more, see, one is the public space, one is the private space. The public space is definitely, as I said earlier, lots of businesses, small businesses, mid-sized businesses, SMEs, they are coming into public space, and that is where the investments can happen and can get very good valuation. And in the private space also, if you look at the AIF number, PMS numbers, those are attracting a lot of money. And the best thing is there's a large number of portfolio managers in the country today who are researching many more companies than ever before. I see in my own company we are going all across the country, every nook and corner, looking at the businesses, talking to the management, researching them, and hand-holding them to come into the public space. Because mutual funds are mostly when we want that Indians should participate in the growth trajectory, then we have to bring the businesses into the public space. That's what we feel as a leader in the country. That is our responsibility, and we owe this to the countrymen that we make them participate in the growth trajectory. That is on the part of Indians when they are looking at it. The foreign money which we are attracting is definitely coming into the space where it is already there, where there's a track record. That's another bucket where we are working very hard, and the whole industry is working very hard to get more and more number of people into this industry. Not if not through mutual fund route, but definitely through AAF route and the PMS route. And I think that the gift city opportunities which are opening up will be a blessing in disguise for all of us in the economic world.
Yes, and Mr. Singh, we've already talked about the growing popularity of mutual funds, but what categories could NRIs invest for the long term? You did touch upon that briefly. Could you delve into it a little more deeply?
Yeah, see, if you think about the NRIs and the psyche of NRIs, one, they're very bullish on India. Two, they are not into the trading mindset. They are busy in their own sphere. So generally, they have a tendency that they want to fire and forget, shut it, forget it kind of thing. And when they have the this complete confidence on India and India story, then they are coming. I think the people who can participate in the equity space and who have the risk appetite, and most of them have. So they should get into a fund which is locked in. So the industry's positioning funds. Unfortunately, we don't have too many close-ended funds in the industry because over the period of time, over the last 1 or 2 decades, we have sold liquidity more than required. So the illiquidity is something which is to be sold to NRIs because they also don't have the capacity to watch it day in and day out. So the close-ended funds like long-term equity funds where the lock-in is there, and there are funds. Those could be in ELSS category because by statute you have to have 3 year kind of lock-in. But those are best suited who want to be into the equity category. And on the other side, if they want to play the asset allocation route, if they're putting a lot of money in debt also, I think the hybrid funds like multi-asset allocation or balance advantage funds are the best for them, and they can definitely put in money, get the tax advantage. And most of the countries now, we have the double tax treaty as well. So these are very tax efficient and these kind of funds. In equity side, most of the NRIs actually want that they should lock in. And for the lock-in thing, the ELS funds kind of category suits them because this I'm saying out of the experience. Though ELSS funds are there where you can put money for tax saving up to 1,50,000, but those are very well positioned to get big ticket business also of the people who are coming and locking in money. And on the security side, I think these kind of diversified funds through ELSS funds route and the hybrid funds like balanced advantage fund and multi-asset allocation fund are the best for them.
All right, Mr. Singh, and talking about global flow down, now how is India going to navigate through it, in your opinion?
See, as is always said, India has two things: one, very robust domestic economy, and then the export orientation. When the countries are slowing down, and but at the same time, if you look at US, look at Germany, even today Germany's number, the inflation number has come at 3.8%. So that's something which is being seen. It's not that everything is cycle. We can hope the things improve across the globe, and the export oriented corporates will definitely get benefited once that happens. Today, the disadvantage is that the because of the slowing economy, our companies who are export oriented, they are facing pushback. But the domestic economy is thriving. The overall the story is good, but yes, this is a cyclical thing. As of now, it is looking bad, but we are hopeful that a U.S. economy and European economy will also come out of it. The U.S. has also seen some. U.S. has already seen some green shoots, and the numbers which are coming from select European economies are also showing signs of improvement.
Well, thank you, Mr. Singh, for staying with us and giving us the detailed insight into the questions. Thank you for your time.
Thank you so much. Thank you.
Well, moving on.